Okay, so we will record this meeting for the sake of those who will come later, and also for those who have attended early. You can you can also use the recordings later. Okay, someone is saying something. Hey, Edward. Okay, you are trading crypto. Hope this course will help. Definitely. Okay, it will surely help. Uh, so the idea is we want to see if we can use computers to automate our trading strategies. Okay, so sure, I will show you how this is going to help to increase your win rate if you are using or if you are trading crypto. So okay, we have another person also joining. Okay, welcome Jane. All right, so I will start for the sake of time so that we can have enough time to also practice. Okay. All right. So as a disclaimer, okay, this is this workshop is basically for educational purposes, not a financial advice. So we all have our own situations. So we are our best judges. So what you're going to learn today is basically to equip you with some skills that you can use to enhance your trading strategies. Okay. So what are we going to learn today? First of all, I will start by doing an introduction. Then we will have our framework, okay, the bot building framework. So if you're going to build any bot, you follow this framework and you can easily build your bot. Okay. After that, I will show you a live demo where we're going to build a bot. I will show you some example of how to build a bot, and then I will also open the session for more Q&A, as well as show you what are the next steps for you to take. Finally, I will open the floor for everyone to also try the steps or the framework to see if you can also build his own bot. Make sense? Are we together? Okay, I assume yes, since there is no question in the chat. Okay, so introduction. Well, I welcome you all to for attending this algorithmic trading or build your own bot workshop. My name is Abubakar Sana Ali. I have a PhD degree in electrical and computer engineering. I have been an enthusiast and I have worked with AI. So my specialization is AI applications to different sectors. I've used AI in communications, used AI in operations research, predictive maintenance. I've used AI also in the financial sector, which is something you're going to see today. And for the host institution, yeah, the company hosting this event is called Asatora Services, basically an acronym of my name. So this company is situated here in the UAE. I registered this company after I finished my PhD, so that I will be offering training services and, of course, consultancy. So that is a little bit about myself. All right. So if you have a question, yeah, about me or the institution, you can ask. Otherwise, maybe it will be nice if I get to know a little bit about each one of you. Good thing that we do not have many people joining yet. So yeah, I think we can just have one few seconds, if we can introduce one another, it will be nice. Okay, who will go first? Edward or Jane? Okay, yeah, nice. Good that you love AI. AI is awesome. It's awesome. It's amazing, The thing it does is something else. So yeah, it's a nice time to be alive actually. Okay, yeah, even in the chat you can just write your name and maybe where you are joining the workshop from in the chat. You don't have to open your speaker if you are not comfortable.
I'll just introduce myself. My name is Jane, and I'm new to this actually. So yeah, I'm willing to learn. Thank you.
Awesome. Okay. So I hope I will be able to teach you something today with your time. Hi, Edward. Okay. All right. So that's good. Let's start. Okay. So trading. Okay. Basically, we all know what trading is all about. Means buying and selling. We have been trading all our lives. So what makes this one different from what we are used to is that here we're going to use the financial market, which is always what, or I will say, is currently digital. So everything is online. You go online, you buy assets, you sell assets, and it's instantaneous. The time it takes to buy and sell can go as low as nanoseconds. If you have a powerful computer or a powerful bot, it can be able to execute trades in milliseconds, some even in nanoseconds. So yeah, and if you are trading, normally you will have a strategy, okay? And this happens also if you are going to buy something. For example, you want to go and shop, you will have your strategy. Maybe your strategy is simple. You check your fridge. If you're out of stock, you write a shopping list and you go to the supermarket to restock your fridge. This is your strategy and this is what you always follow. So also in the case of financial market, you should come up with a strategy which is just a set of rules. Okay, these are the steps I'm going to take so that if I follow these steps, I will always be consistent in terms of making purchases of assets in the financial market. And another thing is the psychology. This also applies to our own day-to-day trading activities. Okay, for example, you are here sitting, then you receive an email maybe from Walmart. I don't know if you're coming from the US. Of course, they will give you different offers. Okay, we have a sale, New Year sale, end of year sale, all this. So sometimes it might make you go and shop when you do not have the intention. You can overshop and all these things. So things come, and this psychology apparently, based on scientific data, was shown to be the most important factor in trading. Okay, I don't know if you are aware of the percentage impact it provides or it brings to the table in terms of success or failure. Some studies are showing that about 90% of your success or failure is as a result of your psychology. Meaning you could have an awesome strategy of buying and selling assets, but if you have not mastered your psychology, then you are bound to fail. And you can have a very simple strategy, but because you've mastered your psychology, you are bound to succeed or profit from the market. Some of the components of the psychology include like fear. You are afraid of taking chances, or you are afraid of losing your money, or greed, in the sense that maybe you got your profit, you set your target, you got your target, but you are greedy, you want to stay and take more. While you are waiting to take more, you lose everything. Hope is maybe in the case where you've lost the money, but you stay in the trade hoping that things are going to get better. So this happen also. So this is psychology. Sometimes even overconfidence. You feel so confident in your own ability. Maybe you got lucky, you got 5, 10 wins in a row, and you feel so confident that I know I'm going to also win the next one, therefore I'm going to trade. When you're supposed to follow a trading plan. Okay? So that's the psychology. The next is the management. So you want to manage your trade. Okay, you just don't want to go and be trading anyhow. There have to be a management. Okay, if you have your money, let's say you have $1,000 and you want to go into the market to make some purchases, you will see a nice asset, tells you, okay, this is a nice opportunity, let me buy. Then should you use all of your money to buy that asset? Oh no, maybe you should have a certain percentage. So also, this is a best practice that we do not want to trade a we do not want to enter a single trade and put more than 5%. That is like the worst case scenario. People normally recommend as a best practice, do not go above 2% of your capital. So if you have $1,000, do not, you know, take a single trade that is above $20, that you are going to lose more than $20. Why? Because the idea is not actually to be profitable, especially if you are just beginning. The main idea is to stay in the game long enough to develop a good psychology. Once you build your psychology, then you will surely be more like your tendency of winning is always going to increase the more you improve your psychology. Okay, you are not fearful. So the idea is saying that as simple as it is we want to become emotionless as possible. We want to take away all emotions if possible. We are not afraid, we are not hopeful, we are not greedy. So that is the main idea. And that is where algorithmic trading comes into play. You know, you have robots. Robots are not afraid. They don't have sense of fear. They are not what greedy. They don't even know what is greed. You know, not hopeful. So the idea is if I have a very beautiful strategy, I automate this strategy so that the robot can take over and I will be able to relieve myself because I know maybe my psychology is a little bit worrisome to some extent. I might be making some mistakes or making, you know. So this is what the algorithmic trading is all about. You use your computer algorithm to execute the trades, and it is done based on what some predefined criteria which we're going to set. It aims to execute orders at the best possible rates. Okay, because sometimes if you are the one executing the trade, there could be an opportunity, but you are sleeping, or you are busy trying to pick a call, or you are at work. You will miss that opportunity. But this is going to be there, watching out for everything. So these are the benefits: efficiency and speed, fast, it's consistent, and it's a disciplined trader. Not only that, it helps you to improve your risk management so that if you said, okay, if I make $10, I'm happy. If I lose $5, I will exit the trade. I'm not going to stay in this trade longer because that is the most I'm willing to lose. I'm not going to lose more than $5. So I make a loss of $5, I will just go. I make a win of $10, I will take my win and I will go. I will not stay hoping to make 20. All right. So this is why it is helping us in that way. Another thing is that it also provides backtesting capabilities. Okay, backtesting means I come up with a strategy, then I use historical data, use this, implement and deploy my robot or my bot on this historical data, and it tries to see, okay, over the history in the previous 1 year, if I had been using this robot or this strategy on this particular asset, will I be profitable or not? With this, I will be able to tell, okay, my strategy is good because it is shown here that over the past 1 month or over the past 2 months, if this robot is there working, it should have been made me a certain amount of money. Okay, so this is backtested. Of course, if you are a human being, we cannot go back in time. All right, so that's one benefit of this. And lastly, you have the scalability. Okay, as a human being, maybe you can monitor 5, 6, 7, maybe 8 at most assets. You are monitoring these 8 products, trying to see when the ability or when the opportunity is going to show itself. But if you have a robot, you can have them monitoring 100, 1000. That increases your chances of getting opportunities because you are monitoring a huge stack of assets. So this is the scalability aspect that it brings to the table. All right. So before I move on, I hope it's a little bit clear about the benefits of algorithmic trading and why we want to do what we are doing today. Am I moving too fast or am I too slow? Are we clicking? Okay, it's clear. Said yeah. Said Edward. Okay, awesome. So happy that I am not too fast. Okay, so now we would like to see how we can build a bot. Okay, so there are going to be tools. When you are building anything, you need some tools to do that. And the tools we're going to use are all free. I try to make sure that the tools we're going to use are free so that you can also use them without having to pay a single dollar, a single penny. Okay, so the first tool is Google Bard. If you know ChatGPT, well, Google Bard is like the same thing actually, but from Google, not from OpenAI. You have Google Colab. Okay, this is going to be our environment. Then we have Python libraries. Okay, These are going to be used by our AI to write our algorithm for us. And then you have Alpaca API. So these are the four which we're going to use, and I will go a little bit deep into each one of this. Okay, starting with the Google Bard. So this Google Bard is going to help us build costume strategies. So we will tell it in plain language, plain English. This is my strategy. This is what I want to do. This is my risk management. This is what I want to do, and it will give you the code. Okay, you don't have to know how to code. That's a good thing with these new tools that have become mainstream since last year. It will generate the code for you. All you have to do is just to copy and paste the codes, and you will get your bots. The next is the creation. It will help us create these bots. Okay. Then what is Google Colab? All right. So of course, if you have a code, you have to have an environment where you can run this code. So that is where Google Colab comes into play. It is a cloud-based Python programming environment. You go there, it's also free, also by Google. You go there, write your Python code, and you run it. Okay, it allows you to simulate different types of codes that are Python, and it is very nice for backtesting trading strategies. Okay, so if you come up with your strategy from Google Bard, you take it to the Google Colab, test all the codes, backtest, to make sure the strategy is good over the history. So all this is made possible. You can run different simulations, different models, all of them. Not only that, it helps you to provide analysis, visualizations, and what have you. Okay, so the Python libraries, these are some of the libraries you will see us using in the lab, of course in the code, but of course, as I said, you do not have to know how to code. Okay, all you have to know is how to write your strategy in plain and clear terms. The Google Bard will be able to use these libraries, but the idea is for you to know that for you to implement the bot, you need some specific libraries. These are some additional features that are added to your code. Okay, of course it doesn't come with it, but if you come up with this, it will help. This includes pandas, numpy, matplot library. Yeah, so we use matplot library, for example, when we want to visualize, to see things. Y-Finance, this is for us to get data. Yahoo Finance, this is the library for Yahoo Finance. If you are a trader, you can use Yahoo Finance online, and you'll be seeing so many information, news, and what have you. So it's also a library here. The TA library, so there is technical indicators. These are technical indicators that we use during technical analysis. For example, you have the moving averages, RSI, MACD, all these technical indicators are also found in the TA library. Scikit-learn, this is when you want to use machine learning. Okay, you want to use machine learning, Scikit-learn is your go-to library. TensorFlow by Google, this one is if you want to use deep learning. Deep learning is a specialization under machine learning. So it's like going deeper into machine learning, and this is where the neural networks come into play. What we are going to do now is going to be powered by neural networks, and that is TensorFlow. PyTorch also the same thing, but this is from Facebook. So this is Google, this is Facebook, but they are all doing the same thing, machine learning or deep learning. OpenAI, this is the company that you are familiar with that did ChatGPT. So if you're going to do things that have to do with, for example, reinforcement learning, so there is very nice packages that are provided by this OpenAI Gene library. So as I said, these are libraries. You don't have to know them now. Just know that these are the tools also that the Python uses. Alpaca API. Okay, so of course we just don't want to develop our strategy and test it. We would like to have this working in real life market, right? So that it can be buying things for us, selling things for us. And in order to do that, we need to connect. Okay, we need what we call a bridge. Okay, you will have your code, and then you will have the market. Okay, you have these two. So you will need to have a bridge that will connect your code with the market. And that is what the Alpaca API does. It connects your code to the market. Okay, so that you can be able to make threads directly from your code, and these threads will be executed in the environment. Okay, you can have your broker, interactive broker, for example. So you have Robinhood, Ameritrade, uh, Avatrade, eToro, all these brokers. Okay, so you would like to see if there is a way to connect them. Alpaca is also a broker. Okay, it's just like eToro, it's a broker. Some of those brokers I've mentioned, they also have their API, like a pathway or an access or a bridge that allows developers and traders to communicate with their own platforms. But most of them you have to pay. I have to say, like for example, the interactive broker, you need like $10,000, I think, no, $25,000 to be able to have access to the API. There is Owanda also. I think their API is like $400 monthly. So all of these are expensive. Some of them require huge amounts of investment before they allow you to have this access, because you know you are able to develop your own bot. Your likelihood of winning or being profitable is increased. Therefore, they want to put as many hurdles and obstructions in your way of profitability as much as possible. So Alpaca is free. Okay, I also like, as I said, I like free tools if possible, if they will do the job. So this is what we're going to use. So as I said, these are the main tools. Google Bard will write things in plain English. It will give us code in Python. We will copy and paste it in Google Colab. And Google Colab, the codes are going to be using these libraries to do our bot for us. After we have finished testing, then we will use Alpaca API to deploy and be making sales. All right. Okay, so now moving to the next part, which is the components of algorithmic trading bot. So far, so good? Yeah? Awesome. So the components of algorithmic trading bots, we have three components mostly. If you're going to have any strategy, you should have these three things. Okay, there are many people who are selling bots online. You can go there and you can find them. Just put crypto trading bots, you will see lists, hundreds of them. You can't be sure whether they are working or not. But one way I will say is make sure that each of the bots you will come across is able to implement these three things. First of all, it should be clear to you what is the signal. The signal means, how do we know that this is a good trading opportunity for us to buy into? Okay, that is the signal. It's like the signal, on traffic lights, you will see red, green, orange, right? So you can assume it like this. So what is the strategy for us to know we should buy Tesla, for example? There is a good opportunity in Tesla. Let's buy Tesla. Or Tesla is not going to do well, maybe from so many things that are happening recently in the company. Most likely Tesla is not going to do well, or I've seen some technical tools to tell me Tesla is not going to do well. Then I would like to sell. And when I'm selling, I'm just basically going to the broker telling him, okay, you know what, borrow me 10 shares of Tesla. I will borrow that 10 shares of Tesla. Maybe I borrow it at $200. So 10 shares, that is $2,000. I will come and sell it right away in the market for $2,000. Get my $2,000, put it in my pocket, then wait, because I have predicted Tesla is going to fall. After, let's say, 1 week or 2 weeks, my prediction comes through. Tesla now is $150, not $200. I will go and buy 10 shares of Tesla for $150 each. That is $1,500. I will take these 10 shares, give it back to the broker. Okay, take back your 10 shares. That means I have made $500 in this transaction. So that is a selling opportunity. Okay, so these are like the opportunities we can come across. We can buy when we know things are going well for the company or for the stock or for the crypto, or we can sell if we know that things are going to go bad, then we can sell. Or we can do nothing if there is no opportunity. So these are the three situations. So you can assume the green to buy, red to sell, orange to do nothing. Okay. So we want to implement this signal. Whatever strategy you come up with, it has to have this signal component, how it identifies trading opportunities. Okay. The next is the order types. Order types, these are the types of orders. Like now that I have identified trading opportunity, I've seen Tesla is good, I need to buy Tesla. Then when should I buy Tesla? Should I buy it right away now that I have spotted the opportunity? No. Let me wait till when it starts to increase, because I'm hoping it is going to go to 250. It is 200 now. I'm hoping it is going to go to 250. Then maybe let me wait till it is, let's say, 210 to confirm my predictions. And that is what we call stop order, because I'm waiting for the price to reach a certain level in the same direction. Okay. Or maybe it is 200 now and I'm predicting it is going to go to 250, but I don't want to buy. I want to increase and maximize my margin. So I will say, why don't I wait till it drops to 180? I know it is going to bounce back, so that when it drops to 180 and it starts to go back to 250, I can now make $70 by buying a single share of Tesla. So this is called limit order. So you can see limit and stop, we are waiting to either verify or to increase our margin, whereas the market order means we execute our trade the moment we spot a trading opportunity. So this one also has to be established. Okay. Lastly is the risk management. Okay, so we got the signal to buy or sell. We have executed. Now we are in the trade. We purchased the asset, but then we have to figure out when are we going to go out, right? We have to figure out when are we selling. It has to be there. Like, are we gonna stay in the trade forever? Of course not. So that is the risk management. When are we going to go out? So the stop loss is saying that if I am wrong, that I'm expecting Tesla to rise, but then it falls. If it falls, then I buy it at 200. If it goes down to 180, that means my prediction was wrong. I will take my $20 loss and I will call it a day. That is my stop loss. Stop loss is 180. Okay, meaning I'm willing to lose $20. My take profit is okay. I'm expecting it to reach 250. It is now 200. If it reaches 250, I'm going to sell, even if it keeps on going up. For me, 250 is my set take profit. It reaches there, take my profit, I go home. I'm happy with my profit. That is take profit. Okay. So these are the things we need to set. That is how we get out of the trade. Either by being wrong, stop loss takes us out, or we are right, take profit, allows us to go home with our winning. Position sizing, this is the amount of money that I'm willing to put into buying the asset. Okay, depending on the percentage of my initial or of my current capital. Let's say I have $10,000. Okay, do I want to put the whole $10,000 into buying that Tesla? That means if I'm wrong, I'm going to lose a huge amount of money. Or do I want to put a small percentage, maybe 10%, 20%, 50%? Okay. By the way, anybody has an idea what the best practice here that is kind of suggested by different studies, that if you want to stay in this game for as long as possible, this is the recommended position sizing that you are advised to always use or not to exceed. Any ideas? Should I put all of my money if I spot a trading opportunity? Like, okay. So yeah, we would like to see if possible. It is advised, don't go beyond. Some will say 3%, some will say 2%. So if you have $100 and you support a good trading opportunity, don't go in with your all $100. Maybe just put in $2, $5, so that if you are wrong, you will still have enough to try again. And as I said, the main idea is to stay in the game for as long as possible to build your own strategy, your own winning strategy. Okay. So now we have seen this. These are the components. So what are we going to do today? Okay, based on this, how do we identify a trading opportunity? There is one strategy, a simple one, okay, based on an indicator. This is a statistical indicator. It's also a momentum indicator. It's called the RSI, okay, relative strength index. Relative strength index. So we want to see how the price changes are happening over a certain period, okay. And this RSI, you will see it very soon. It has a range between 0 to 100, okay, between 0 to 100. And we will set thresholds. If this RSI is above 70%, we say, okay, this asset is currently overbought. That is, so many people are buying this, it's going to drop in price, okay. Therefore, I will just short sell it because it's going to drop. So let me just go and borrow crypto from a friend, maybe 10 bitcoins, and then if it falls down to 40, I will just give him back his crypto. 10 of them I will buy and give it back to him. So that is if it reaches, let's say, 70%. And then we have the bottom RSI less than 30%. So at this we are saying it's oversold. Like this will tell you most likely people are selling. There is so much, so it's going to soon start to increase. So it's going to be a reversal. Hopefully, if I buy it now, if I buy crypto now at 30,000, I know it is going to rise to 40,000 because people are selling. It is overdue. It is oversold. So for that, I will go and buy crypto, Bitcoin, for example, at 30,000. So this is our signal. This is how we know how we spot a trading opportunity. And we will explain this to the Google Bard, and it will generate the code for us. Okay. So this is going to be the logic which we will tell the robot. We will tell it, okay, in our scheme, if the RSI falls below the oversold threshold, that is 30%, this is suggesting a potential reversal to the upside. Therefore, buy. Okay, that's why we call it buy signal. Okay, that's why we call it buy signal. So if we see the RSI below 30%, buy. If you see the RSI above 70%, sell, because this asset is currently oversold. Okay, and this is how you will see the chart. For example, this is our real market chart. Okay, and we normally will put this indicator, and this is the RSI indicator, this level here. Okay, here are the thresholds. This is the 70% threshold. This is the 30% threshold. Okay, so we said if we see that this is going to exceed 70, for example, at this moment here, at this point, okay, you can see, we can trace it up. If you look at it here, okay, let's trace it up like this. Okay, so here you can see people are selling, are buying. So we believe it is overbought. So that means it's a good time to sell. That means if I borrow this at 130, yeah, let's say at 137, I can sell it. Okay, I can go and borrow 10 of this. How this is okay. Okay, so I was talking about this point here. Okay, so if this is, let's say, 138, for example, and I go, I buy, okay, 10 of them, that is for, I borrow it for 1380. Okay, then I sell, I go, I buy, I sell, I got my 1380, put it in my pocket, then I wait, because I know this is going to go down. It has been overbought, and as you can see, it is going down, start to go down. Okay, the general trend is going down. Maybe I put my own stop loss here. My stop loss is here at 130, that if this thing drops to 130, take my profit and go. Because so once it reaches 130, I will say, all right, so 130, I will go and will buy 10 of those from the market. So 130 times 2, that is 1,300. I will get these 10 stocks, 10 shares, and then I will give it back to the broker. I will go home with an $80 profit. Okay, So I got my idea of entering the trade just by looking at this. Okay, just by looking at this. Okay, the moment it reaches this overbought, I was like, aha, this is a signal. It is going to soon start to fall. And as you can see from the trend, it really falls. And you can look at it also here. You can see here. You can draw here also. You see? And you can see it did fall, even though it's for some just short amount of time, but it did. Okay, so this is how the RSI works. And let's look at this part here where it is falling. Okay, so here we are saying it's oversold. You press it up, as you can see here. This is the point. Maybe if I enter from here and I sell at here, you can see I make a profit. Maybe I'm buying at 133 and I'm selling at 143. That is around what, $10 difference, you know. So if I buy 10 shares, that will be 10 times 10, which is $100 profit. Okay, makes sense how this our strategy works. Should I move on? If this is clear, because we want this to be clear. Yeah, can I move on? Give me a thumbs up if this is clear. Okay. All right, so how do we, assuming this is clear, how do we now enter the trade? Okay, we will use market order. We know we have spotted a trading opportunity. Should we buy immediately or should we wait? So we are just going to buy immediately. We are not going to wait. So it's going to be a market order. Okay. Okay, Edward is asking which time frame should we use. Yeah, it depends. Here I did not talk about the time frame. Okay, it's up to you to decide. As you can see from this plot here, I think it is this one is, yeah, it's daily time frame. Okay, it's daily, because from June here to here you can count 30 candlesticks. So it's daily time frame here. So it's up to you. You can use 14 minutes, 4 hours. It doesn't matter. The idea is whichever time frame you use, try to see if this strategy works for that time frame. And this is one good thing about algorithmic trading. Okay, you can do this backtesting. Maybe the strategy is good, but it only works well if your time frame is 15 minutes, or it works well if your time frame is 4 hours, or if it works best if the time frame is daily time frame. How will you know this? Just try different time frames in the back, you know, using historical data. See the performance of the robot. Okay, see the performance of the bot, and if the bot is doing well on all time frames, yeah, you can conclude that it can do well for all time frames. Your strategy works for all time frames. So it doesn't matter. Okay, the time frame here, you can use any 15 minutes, 4 hours, daily. It really doesn't matter. But the point is, don't use it without optimizing it. Make sure you figure out which of the time frames it works best with. If it works with all, good. Okay, so risk management. Okay, how do we intend to manage our risk? Okay, so since this is going to be easy, I don't want to also complicate this, but of course, if you go to look at other complicated strategies, you will have different indicators to tell you where to put your stop loss, where to put your take profit. But what I will do here, I will just use my simple RR. Okay, RR. I will say, okay, I want to make, let's say, yeah, 2 to 1. This is my RR, meaning that if I'm willing to lose $10, I'm expecting to get $20 back. Okay, this is my RRR. So if I buy, let's say, Tesla at 200, okay, if for example, my account balance is $10,000, I have $10,000 in my account, and as I said, using best practice, we don't want to go above 3%. So let's say I spot a good trading opportunity. So I'm willing to put in, let's say, yeah, 2%, that is $200. Okay. So I know if I lose $200, that is my loss. But what I want to get is 400. If I am right, my prediction is right, I want to make $400. Okay. So that's what we are trying to do, 2 to 1. So therefore, whatever the price is, I will say, okay, the order price, okay, my take profit if I am buying is going to be the order price plus 2 times amount I am willing to lose, right? I am willing to lose. So in this case, let's say the order price is 200, okay, and I'm willing to lose, let's say, for example, 200. So 2 times 200, that is 400. So meaning that if I have this, so I will not sell Tesla until when the price reaches 600. Once Tesla price reaches 600, I will take my profit of 400 and I will go home. Okay. My stop loss though is now going to be at a point where I have my order price now 200 and Tesla crashes to 200, for example, and I come back with zero because I was willing to lose 200. Okay, but because we are using margin, things here will change. Here I'm not going to use any leverage. I assume 1:1. That is the only way I'm going to lose my money is if Tesla goes bankrupt and the stock falls to zero. Okay, that is to say, whatever happens, I'm going to lose. So this is my point here. Okay, so this is what I want to make. This is what I'm willing to lose, for example. Okay, I hope this is clear. So this is my simple risk management, and as I said, I'm going to just put 2% as my position size. 2%. I'm not going to put more than 2% of my initial capital. And the case applies. The reverse case applies for the selling. If we spot a selling opportunity, I will use the same take profit and stop loss logic to get out of the trade so that I do not lose my money. Okay, I believe this is clear. Okay, so now that I have all this in place, I would like to make this automatic. Okay, it has to become automatic. Okay, so that it will keep on happening. That's the automation part. So you put it, let it happen on schedule. Maybe let's say I'm using the 15 minutes chart. So every 15 minutes, the robot will check for an opportunity to buy or to sell. If it spots one, it takes the trade. If it doesn't support any, it skips it and let it leave. Okay, and let it go and wait for the next 15 minutes. Okay, so this is my framework that I use to build trading bots. This is the steps I follow. So I will start, and all these steps you will see here, I'm going to write them in simple English. I will give it to the Google Bard to give me the code that I need to have my code, my bot working. Okay, so let's go into that. Let's build this. Okay, all right. Okay, question? No question yet. Okay, so I will start sharing my screen now. Alright, so for the sake of time, I've already written down my prompts. Okay, and as I said, we are going to follow the bot building framework, starting from step 1, 2, 3, and then 4. So for the first step, okay, I told Google Bard, because I also have this, so I pasted the first prompt, and this is what I told it in plain English. I want to build a trading bot that will trade Google stock I want to use Alpaca API to connect to the market. I have installed all necessary library requirements. These are my details to connect to the Alpaca API. I gave it the details from Alpaca, and then I said to test the connection, start by executing an order, a market order on Google. So we want to buy Google stock. I let the trade run for 10 seconds, then cancel the order. Okay, so there are a few things here. Okay, first of all, I gave it my details for the Alpaca, and also I told it I have installed all necessary library requirements. So if you remember, I explained these Python library requirements, and for installation, I will come to Google Colab, and Google Colab, as I said, is the Python development environment which we are going to use. So in order to install all those libraries which we talked about, starting with TA for the technical analysis, Alpaca, which will create us an access to a broker, Pandas for the data analysis, Y Finance for backtesting and accessing data, historical data, Matplot library, this is for visualization, schedule, this is for scheduling our trades. So we will install this. Okay, that's what I told it I did. So I will start by doing that. As you can see, it is installing. So we'll allow it to finish. Okay. The next thing I told it is that these are my details for Alpaca. So what do you want to do? You can also go to Alpaca. It's a free tool. As I said, the API is free. You do not have to pay. Come to Alpaca and it will bring you to your home page. The home page will have details of your portfolio and what have you. So by default, what do we normally do? In Alpaca, you can use and you can trade stocks, crypto, and what have you. You can do that manually by coming to this panel here. You write, for example, this is Google. That's what we want to buy. This is the price of Google currently. We tell it the type of market order we want to make. Market, we want to place the trade immediately. We want to tell it how much we want to buy. Should we buy the share? So we can say, let's say, for example, 10 shares. Or no, we have our amount of money. We want, let's say, to buy for $1,000. So it will calculate the share for us, and we tell it to do the GTC until it's cancelled. I will say review order, and then I will give confirmation. So this is how my order is going to be created. I can come here to my accounts. I will go to orders. Okay, and you can see the order that was just placed now. Okay, so this is the way you do it manually. Our idea and our own goal is to do this automatically. We automate this process, and in order to do that, we want the API. We want to use the API. To get our API details, we come to the home page. See, instead of quick trade, we just click this view API keys. Now with these keys, we can be able to use them to go and build our trading bot. And these are the keys I copy. You can see PK68. You come to Google Bard, these are the details I gave you. PK68, my endpoint and the secret too, which you will obtain once you come here for the first time. If you open your Alpaca and you come here, you will see generate keys. If that is your first usage. For me, I have already generated my keys, therefore I can visualize them. The secret is always hidden. So even though I am showing it here, it doesn't matter because this is a paper trading account. So this is what you need to do in the first place. Okay, so as you can see, we have placed order manually. Now we want to see if we can place the order automatically from our code. Okay, so that's what I did, and it gave me this code here. Okay, and this code will allow me to make that order placement directly from my code, okay, without having to do it manually. Okay? Here I can come this folder which we just created. I will come click it and I will close it manually. I will come, I will just say close. So it will tell you, are you sure you want to cancel it? Confirm. Okay, so this is manual. So now God has given us code so that we will be able to automate this process. I copy this code. Okay, this has finished installation. These errors do not matter. So exactly this code as you see it here, I copied it, come here, I paste edit. Okay, all you have to do is click here, or Control MB, and you can be able to create a cell. You paste the code in the cell. Okay, so I can copy this code here, come to Google here. Yeah, you can see create a cell. You see, by just clicking this, I have created this cell. I can paste it here, for example, and then I can run this. Okay, so our idea, you see, market order submitted. So it is going to allow it to be there. Let's check. Aha, you see, market order submitted a few seconds ago and cancelled just now. So you can see it was submitted, it allowed it to run for 10 seconds, then I cancelled it. So that process which I did manually that took me like 4 minutes to do, now you can see it is done automatically for us. So we are happy a connection is established. All right. So what do we do next? So this cell and this cell are all the same. I just added it to show you how to create a cell and paste the code. Okay. So now we want to build the strategy. Okay, so we want to build the strategy. What do? We come and explain about our strategy. But this is what I prompted. Told it I want to use the RSI scheme to build the trading bot. The details are as follows. The trading bot logic. Buy signal RSI falls below the oversold threshold, that is 30%, suggesting a potential reversal to the upside. Sell signals RSI rises above the overbought threshold, e.g. 70%, indicating a potential pullback. Order type, market order. I want to place immediately. Risk management, position size is 2% of my account. I don't want to go above that. My risk reward ratio is 2. Okay, so my risk reward ratio, I want to risk 1% in order to make 2%. Or for example, 10 to make 20, 100 to make 200. Stop loss, this is how I define my stop loss. If I'm buying, I want to make the order price minus the amount I'm willing to lose, where the amount I'm willing to lose is equal to my account balance multiplied by the position size. Okay, and the selling, if I'm selling, okay, I'm selling the asset, I will say, okay, the order price plus the amount I am willing to lose. Then the take profit, that is, if my predictions were correct, this is how it's going to be. I want to take the order price and like to add the amount I want to make. Well, the amount I want to make is equal to the amount I'm willing to lose multiplied by the RRR. So if I'm willing to lose 100, what amount I'm willing to make is 100 times 2, which is 200. Okay, and the selling is also the same thing, order price minus amount I want to make. So I asked it, let me know if you understand this before we move to the next step. So it responded, yes, I understand the RSA trading bot logic for the type of risk management parameters you've outlined. Here's a summary of the key points. Buy signal, RSI is less than 30, sell 70, market orders, position size 2%, RRR, risk reward ratio of 2, and this is the stop loss if I am buying. This is the take profit if I'm buying or selling. I'm ready to proceed to the next step of building the bot's code. So we are happy with the explanation. It actually understood every bit of what we want to do. So then I tell it, okay, thanks. Building on that, I want to backtest the strategy using Y Finance data. Assuming my initial account balance was $10,000, I want to know the total return in the last 45 days in percentage and account balance. So what is the percentage I made and what is going to be my current account balance? I want to print the number of times I buy, the number of times I sell, and the number of times I do nothing if I am using the 15 minutes time frame. These are the libraries I use to set up the environment. As I indicated earlier, I made this set of environment, which was the first line in my Google Colab, and I told it I want you to write me the Python code. Okay, so I built the context, told it what I did so far, and I gave it instruction on what to do. And it gave me the Python code, which is, as you can see here. So I can copy this, go to Google Colab, and I can remove this and paste this code. Okay. So I run this code. Okay, so I come across an error. I copied the error as usual, go to Google Bard, and then I told it. I ran the code and got the following error. I pasted this error. I told it give me the corrected code, and I want the whole of it. No placeholders, no placeholders, please. So Google Bard has this tendency to give you pieces of the code. Just correct the part that is needs correction, and then tell you to go and find your way of putting it. So to avoid that, you have to be implicit. So I told it no placeholders, please, so that it gives me the code completely. And what did it do? It corrected the whole code and gave it back to me. So all I have to do is just to copy, go here, okay, then paste, for example, and then I can run it. Okay, so this one worked. Aha, look at our trades that were carried out. So selling one share of Google at 127, the stop loss is this, the profit is this. So you can see the amount. Okay, so my stop loss is at 327. That means I'm at like 200, right? $200. So that means if you go backwards, so it will be $400. So minus 272, plus 127. If you look at the range, it will be 400. So that means my R is 2, which is as expected. Okay. And that is what happened. So it was selling, it was buying, selling, buying, 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 selling, buying, buying. You can see. So many trades. And we made a total return of 64.79%. Not bad, right? Now our account balance from 10,000 is 16,479. Total number of trades for buying is 56. For selling is 94. And the number of times that we checked after every 15 minutes where the trading signal, where there was no opportunity, was 1008, which is very nice. Robots are very nice. Even though most of the time they are not doing anything, they are not, they do not have the impulse of just taking the trade, even though like they have spent most of the time doing nothing. But you can see the little amount of time, they got to manage to place the trade, they were able to make money. Here we have lost money in some of the trades, negative, So some we have made, some we have lost. And you can see it even generated some visualizations for us with the thresholds for the oversold and the overbought. You can see. So as things are going, so whenever you have this, you sell. Whenever you have this, you buy. So this gives you a visualization. Now we are happy. We can see our strategy is going to work. So, okay, now to our building framework. We have done the second step. We've tested the strategy. The next is to connect to the market and to execute the orders. These are the next steps to connect to the market. Now our strategy works. All we have to do is to connect to the market. All right, so going back to Google Bard, I told it, thanks. Next, I want to use the strategy described above to enter the trade, and also I want to maintain the risk management I defined above to exit the trade. I want to use a scheduler to schedule my trades every 15 minutes. That is, my candlesticks should be 15 minutes candlesticks. Write me the code that will run the strategy using the Alpaca API keys I provided earlier. Said awesome. Took it and it gave me the whole code. Okay, like this. All I have to do is just to copy it, and I told it thanks. So it explained to me what it did. These are the features of my bot. It connects to the Alpaca using my credentials. It fetches latest price and calculates RSI using Y Finance. Then it implements buy and sell logic based on the RSI thresholds and risk management. Then it uses Alpaca API to submit orders with stop loss and take profit. Okay, it schedules trade check every 15 minutes within the schedule library, and then it tracks account balance and current position for continuous trading. It gives you some few advices also, remember to thoroughly test the code in a paper trading environment before deploying it with real money. Monitor the bot's performance and make adjustments as needed. And also it tells you to consider adding features like logging, error handling, and more advanced order types for enhanced functionality. So this is something we will see in the next workshop, which is going to be on Wednesday. Okay, an advanced order type. We will see this one. Okay, so I came back here to my code. Okay, I pasted everything here. Then I ran this code. Okay, so as you can see, now my code is going to be running automatically. All I have to do maybe is to be checking on it, maybe daily, weekly, depending on my trading plan. Okay, I'll be checking on it to make sure the bot is working. And if there are some things that are out of order or I need to make some adjustment to the code, I made the adjustment. All right. But with this, it is going to run continuously. The only thing I will mention here is that uh, with Google Colab, if you are on the free version, you have only 24 hours. So if you are a day trader, you can run your code for 24 hours, or you are a scalper, so you can run your bot for that day. You have no issue. But if you are going to go, if you are a swing trader or an investor, then you should understand that 24 hours might not do it for you. Your trading bot will not continuously run. So maybe once it places orders and it sets everything, the next day too, you have to come and run this code again so that it will also spend the next 24 hours working. So if you don't want to do this every day, you come and run the code for that day. You can register or subscribe to the pro version of Google Colab. It will give you, I think, like 4 days or 5 days. So that will cover for the week. And if you still want to have it to run for months at a stretch, you can go and get a Google virtual machine from the Google Cloud services. And with the virtual machine, you should be able to have your code running as long as you want. So we have finished with the bot building framework. Okay, so the next is questions and answers. If you have questions, please go ahead and ask them. Sorry, guys, it's a lot, right? But if you follow these steps and I give you this prompt, I will send you the prompt now. You can try it to build your own bot. Okay, I will send this now. Try to use it. See if you can also build the bot. Follow these steps I give you. Okay, yeah, this one. This is it. So let me go to the chat. So guys, we've come to the end. Uh, Now the last part is for you to use this to also build your own bot. Use this framework. Okay, with this using these 4 steps and the 4 prompts. So if you have questions, think can ask. I have given you contacts, right, to my WhatsApp. Also the link you can book for a meeting And you can talk to me on WhatsApp. I normally respond fast, as soon as possible in like 30 seconds. Okay, Kata is here. Welcome, Kata. We missed you today. Okay. So yeah, today we did another strategy, the RSI. The recording is going to be uploaded to YouTube 1 week from today. And as I said, our application, you can download it, although it is currently under maintenance, but it will soon also be made available. Okay, so just reach out to me on WhatsApp. I will send you all the files, and yeah, we can have a meeting one-on-one, 30 minutes. I can maybe give you advice on what to do if you want to also pursue this as a way forward. You like algorithmic trading as a solution to trading, and yeah, anything AI, machine learning, you can talk to me. That's my thing. Okay. All right, guys. I think it is time. If you have questions, you can ask, please. If there is no question, you can call it a day. No question. I hope I was clear enough. I hope I was not fast. All right, guys. Take care. Bye.